Thank you for joining me. Let's get going. What I'm going to talk to you about today is a really simple but highly effective way of trading extreme volatility, the kind of volatility we saw on Wednesday, which led to a huge move and a great number of pips. So I'm going to walk you through it. I'm going to walk you through why I took the trade in the first place, and most importantly, I set some fairly decent large targets for that. I'm going to explain why I did that. And the other reason for doing this is because I think we are going to get into quite an increased period of volatility. So I think there are going to be a lot more opportunities like this. So hopefully by this short, sharp, quick fire workshop, you can be ready for the next move and do a decent number of pips yourself. Okay, I'm going to be talking to you about the advantages of coming into our trading room as well, and what you can get out of it. So let's get going. But I've kicked off with this slide because I think this just about sums it all up. Trading is counterintuitive. Some of the best moves are moves that don't feel right at the time, and we'll talk about why that is and how to avoid missing those trades because of that kind of emotion. There's not that many traders out there who've got the kind of experience that I've got, the years in front of screens, the years back testing and refining a system. So I'm going to share all that experience with you today and talk about some of these up and coming moves that I'm seeing. By all means, punch in any questions, and then we'll have a Q&A at the end if you have got any questions. You can either ask or punch them in the room when we get to the end. But in the meantime, do punch in any questions in the chat box. Okay, so what I'm going to talk about is one of the most powerful day trading setups that exists in my book. I've seen 3,000 pip moves in a 24-48 hour period coming out of these setups, and so it's important that you're ready for this and that you also understand why the probability is so good, why the potential is so good on these setups, because if you understand how the mechanics of them, then you can anticipate them and make the most of them. Okay, so a little bit about us. Trade Easy Way has been around, was set up in 2009. It's all about very clear system entries, automated entry, and getting right away, far away from discretionary trading as we possibly can. I've been investing for a very long time, but I've been a day trader since 2005. So I've spent around at least £7,000 on courses because I started investing in '84, but when I decided to become a day trader in 2005, I made all this investment on various courses. But the best investment I ever made was when I worked with a UK veteran trader who worked in the US futures pits. So he had worked and experienced firsthand how the market works at the coalface. Of course, there aren't any futures pits anymore. Everything's online. It has been for a long time. But the essence of what he learnt in the pits, that he was able to transfer the knowledge to me and lots of other people, is probably the most valuable lessons I've ever learnt. But that kind of level of investment has paid absolute dividends over the years. And you can make a good futures trader can make that money in a day or maybe a week, depending on what sort of leverage they're using. Okay, so he didn't give me lots of slides and files and this, that and the other. I just watched him. He explained his system. I watched him trade, and I walked away. I didn't just jump into that kind of trading. I back tested it and then developed the system, converted his system into what made it work for me. And this lady on the top, this is one of many keynote speeches I did. She actually lives and works in Kaliningrad. Anybody who's good at geography will know that is the slither of land between Lithuania and Estonia. And yeah, so I've done a few keynote speeches around Europe and Asia and had a fantastic amount of fun doing it. I don't tend to do it now because it's just so time consuming. Right, an expensive way to learn. If you want to learn on YouTube and Facebook, etc., good luck with that, because that's a very, very expensive way of learning, if you haven't already discovered that. I'm not going to bombard you with slides. I'm going to get straight into this. Is a short, sharp, quick fire workshop. Not any lengthy lot of slides, but just going to go through a few slides with you and then get going and get into the trade itself. Disclaimer: trading carries risk. You can lose more money than you have in your account, and this material is copywritten, very, very carefully protected, as for obvious reasons. Key facts that can affect all of our trading. Market moves sideways at least 80% of the time, if not more. So if you just want to trade breakouts, you need to know when you've got a breakout in the making and be very clear about the difference between a consolidation and a breakout market. Trading is counterintuitive. Otherwise, if it wasn't counterintuitive, everybody would make a fortune out of it. And unfortunately, if you look at the statistics from brokers, a lot of people do not make money out of it. And those people who do not make money out of it don't have a system, they don't have rules, and they're effectively gambling. There's no two ways about it. There's too many people out there who think they're traders, and they're not traders, they're just gambling. If you have to know a system, you have to know the code of trading if you want to keep your account going and grow your account, particularly in this kind of volatile environment. And like I said, I think this is going to get more and more volatile as we get into the autumn. And I can't go into the ins and outs of that, but I'll send you a link to a webinar I'm doing tomorrow night, because I'm going into the ins and outs of what I think the big picture is tomorrow night. Right, let's just concentrate on day trading. And what happened on Wednesday and why I think that's going to happen again, and how you can prepare for that. Okay, so I'm guessing you all missed the trade, otherwise you wouldn't be here. I'm guessing you didn't do 1,500 pips, otherwise you wouldn't spend your time here on a weekend listening to me. So, okay, Mike, why did you short the Dow at just gone 7 o'clock, and why did you post an alert at 8:30 on Wednesday night suggesting that everybody shorts the nasdaq, or at least I say everybody in our trading room got that alert? A little quote there from John Henry: if you take emotion, would be, could be, should be, out of it and look at what is and quantify it, I think you have an advantage over most human beings. In other words, you have to be robotic in trading, and you have to eliminate as much as you can discretionary trading. You got the trade came out too early. Okay, yeah, we'll talk about targets. Thanks for that comment. I'll bear that in mind as we talk about the setup, and we talk about the targets I had. So facts that affect your trading. My system came out of trading in the futures market in 2005 plus. It's a brilliant system, and what my system does is, I'm going to give you an insight into that today, is it measures intraday pullbacks, it predicts intraday reversals, clarifies breakout setups, and as we're going to talk about in the next few minutes, it looks at data moves. It allows me, now this is something that experienced traders do, less experienced traders do not do. It allows me to add to winning trades and cut my losers quick. Now I had made a loss on this same day on Wednesday. I made a loss on oil. So I'm not sitting here and telling you I'm some fantastic, amazing trader. I'm not. I'm just a bloke who's worked very, very hard, invested in my own systems, my own entry into the day trading market, and I'm a bloke who has just decided to be professional a long, long time ago and worked hard at achieving a professional level of trading. So my win rate varies between 67 and 84%, depending on volatility. I need volatility. I'm a momentum trader, so the more volatility, the better my potential win rate, and obviously the more money I can make. Sideways markets are useless. Well, I say they're useless. You can exploit a sideways market, but the profit potential is always going to be in volatility. Now on Wednesday we had a classic, absolute classic setup. I was taught this by an American trader back in 2005, and it is very, very high probability. Those that don't work are either because the pullbacks are too shallow or it just breaks. If you get a situation where it just breaks, rule number one, I do not chase the market. That's a fool's paradise in my book. I do not chase the market. And the reason why I don't chase the market is because if you get a breakout that is a very severe, violent breakout, guess what? A lot of other traders have missed out on that market, on that move. So the markets have a very, very good habit of boomeranging right back to where that breakout came from. Next day, next week, whenever. But if there's an aggressive move, I have a system of monitoring that breakout level and trading it further down the line. And I'll talk to you about that if we've got time. So here's the calls. So for those of you who are not in my trading room, these are at 7:33 on Wednesday. I said I was shorting the Dow at 290 and I had a 40 pip stop. I'll talk about the target in a minute. I'm going to hold overnight if we close under 120. The target is 505. 34,505. Now we actually reversed at 34,565. So my prediction was 60 pips out of a total of something like out of a total of 700 pip move. I was a mere 60 pips out from the low. And I said here at, I don't know if you can see that, but that's 8:22 on Wednesday evening. At 8:22 Wednesday evening, I said that the nasdaq is a sell at 970. The entry is 970 in the last hour of US trading. All right, so that's what I was talking about in the room. Let's talk about how that comes about. And just for the actual evidence of my account, that blue line at 290 is my entry. So this is how I actually traded this in two accounts. This is just one account. You can see it's got 200 pips on the books as I took that screenshot. So that green line underneath it is actually my stop. So at this, by the time we were 35,000, and by the time we were 200 pips away from my entry, actually it's saying 192 there, isn't it? By the time we were 192 pips away from my entry, I had put a stop to break even plus something ridiculous like 5. Basically, all I was doing is just covering my spread. So that's how confident I was about this setup. That's how confident I was about my prediction, well, my entry, number 1, and my target, number 2. Had I been less confident, had I thought this was just an intraday move, I would have probably started to trail the stop down, or even just consider taking it out of this support. Because here we've broken support at 35,116. And I'm still in the trade. I'm not thinking about getting out. I'm still in the trade, sitting there, waiting for my move. So just a very quick note, you can only succeed with a system. If you do not have a system, you're gambling. Study. Yeah, I got to where I am because I studied, I back tested, I created a massive chart library, split up into all my different setups. I prepare for every market session, at least an hour minimum, more at them on a Monday. I'm clear about leverage, I'm clear about targets, and I keep a journal. If I make mistakes, if I make a series of mistakes, then I've got a journal that will pick holes in my trading, that will tell me where the holes are in my trading if I have made any mistakes, if there is a period where the system is not working. And at least once a year, if not more, I issue revisions to the system if the market is behaving in a certain way and the system demands it. So I made a major, post-COVID, I made one major revision of the system, which I've been publishing and using ever since. So let's go back, let's come away from these slides now. And believe it or not, this setup is so simple. There's nothing complicated. I've not reinvented the wheel. All I've done is I've noted, I learnt this system a long time ago, and I just apply it every time there's a big move. So this system works when you've got an aggressive initial move. So at the start of this move, let me just recall this in detail. Right. This is actually a 2-minute chart. Now, you would never ever get a move like this if you study 2-minute charts. All the preparation, I haven't got time to share with you all the preparation, but this move has come about from, I will talk about elements of it in a minute. This move has come about from elements of preparation I did at the weekend, not 2 minutes after this data announcement. Anyway, let's go through this. So in the announcement was the Fed minutes at 7 o'clock UK time, and this is what happened at 7 o'clock. The 7 o'clock bar, that's 7 o'clock. Now the initial move is up. Then you get this big drag down. So the overall direction, the overall market reaction to that move is down. And you're looking at a top of 342 and a low of 150. So you're looking at a 200 pip move. Now, that's fantastic, isn't it? If you get a 200 pip move in one day, you probably think to yourself, right, that's brilliant, that's fantastic. I'll bank that and I'll walk away. But what are the chances of you getting that 200 pip move? I would say very slim. Why? Because it's very aggressive. How do you know that's going to be a 200 pip move? I don't. I did not know that was going to be a 200 pip move. Okay, Mike, so why have you got us here to talk about 1500 pips over the NASDAQ and the Dow? Because this is the system. This is how it all works. Let me peel all this back and you'll realise just how bog simple this is. All you do is you take the fibs on that initial 200 pip move, drag it up, and you can scale this up and scale this down in daily time frames and 2-minute time frames, intra-week time frames, you name it. But this is a data move, and so what I'm looking for, if that is the direction, let me just grab the pen a second. That's the direction, that's the pullback, that's the move. Anybody who's studied Elliott wave will completely understand this. Anybody who hasn't studied Elliott wave, if you're serious about trading, study it. A, B, C wave. The third wave in any move, whether you're looking at daily charts, weekly charts, or intra-week charts, the third move is always the most powerful move. Now, okay, so what's the entry? This is the whole crux of the whole thing. The entry is the 61% pullback, which is there. So just to repeat this, I'm not going to try and jump in that. No way am I going to try and jump in that. That's your direction, that's your pullback, 61% pullback, that's the move. Alright, that's simple enough, Mike. I can understand that. I can get to grips with that. So why did you predict 34,505? So I'll share that with you as well. Here's my 4-hour chart. Let's just get rid of all this. Tidy this up. Right, what you've got here, you're all looking at patterns. Patterns repeat themselves, as anybody who's been trading for any length of time knows all about patterns and how patterns repeat themselves and how patterns are powerful. All we've got here is a 4-hour chart with a massive trend line coming underneath. And if you look at, if you copy this line, post that up the top. So if you look at the two touches of this 4-hour chart up here, I tried to short this. I actually got a minor stop out here. I tried to short this into 490 on Monday, and I got a small 35 pip stop out. So once I got stopped out, I walked away and left it. But all you've got is resistance, and you've got a key level of support down there. And so the support comes from, should have marked this up before, shouldn't I? I've got this actually lined up on a different chart, it looks better. Yeah, okay, here's the trend line I was looking at. That's the one I was looking at. Serves me right for doing this on the hoof, doesn't it? That's the main funnel pattern. So what I'm looking for now is, so you get at 8 o'clock in the evening. This is where the bigger time frames really count. At 8 o'clock in the evening, you get an engulfing bar in the 4-hour chart. So an hour before this market closes, you have a bar that has completely, we close there, which has just engulfed the last 1, 2, 3, 4, 5, 6 bars, 6 4-hour bars. So that is that's one and yet another confirmation that what you've got in your hands is a move that is got the potential to continue. All right, the 505 target comes from, just try and remember. Yeah, I was looking at this 490 target, expecting that to come into that main support down there, and it front run it. So we've got a low of 558, 560 roughly. Somebody once said, you spend 12 years at school, 4 years at college, X number of hours learning how to trade, and all you need is a support and resistance line. I would entirely agree with that. There's the two tests at the top, double top on the 4-hour chart, lower close in the 4-hour bar, and down you come to a major level of support. So, but what I've done, so if you sort of knit this together, what have I done? I've done a 3-wave move in the initial data move by trading a 61% pullback in the initial 200 pip move, and I've got a 4-hour chart with support and resistance on it. That's all I've got. If you want to drill down and look at the bigger time frames, this is how my daily chart looks at the moment. So if you missed out on this, no need to fret, because what I think is going to happen here, I'll share with you what I'm going to be talking about tomorrow night. What I think is going to happen here is, I think we are going to tap. So that's wave 1. I think we're going to potentially tap back into this range, or potentially in the top of this channel, and then I think we're going to wind our way down. So I'm going to be talking tomorrow about how to get positioned around here somewhere for a very big move. And the overall trend line, you can see this trend line popping up into 34k. You've got a lot of trend lines and a lot of technical data that suggests that these levels are potentially going to be seen. Look at all the volume come down here. We came down here on really nice volume. Look how, here's another hot tip. Look how we've come up on lower volume. Volume is the lifeblood of trading, and it sure is the lifeblood of a day trader. As a momentum trader, I'm looking at volume more than anything else. Let me share with you oil on Wednesday. This is the one. This was another major signal to me. What happened on oil on Wednesday was a major signal. There are several things in the market that I look for the heads up. And look how pathetic this oil volume is. Oil traditionally pulls back this time of year anyway, but the volume in this oil is just falling through the floor. Here we got tensions in the Middle East, and yet this came up on very little volume. We didn't break the highs in the volume here. We came into support and we still had no buyers volume. So when we had invents on Wednesday, inventories are normally, if you just trade fundamentals, you would have bought oil, because the inventories on Wednesday showed if the stockpiles in oil showed a massive decline on Wednesday. And what did oil do? We had a temporary push higher, and then they just pushed it through the floor and left it, and here we are down here. So this was just this to me was just another little piece of the jigsaw. Try and draw a jigsaw here. That said to me, this market, the appetite for risk on this market had evaporated on Wednesday, completely evaporated. So the potential, the indices are bounced. Well, this oil's just continued. All right, so I promise you this is going to be a quick fire, short presentation. Now's your opportunity for questions. Any questions? While you're thinking of any questions, I'll talk to you about, if you want to come into my trading room, this is the system. So it's a 4-hour program. The next one is Monday at 4 o'clock. If you're not able to do Monday at 4 o'clock, there is an option to do it by video only. The program covers these strategies: gap and go, open breakouts, reload, intraday reversals. Now these are very profitable when they come about. We've got to have an anchor system which ties everything in. All this system is tied in with the anchor. If the anchor doesn't shout a good trade, then I'll steer clear, or at least go in only half size. If a trade works, then I'll add to it. But it's a live trading room, 5 days a week. So if you come on the program, you get to come into my live trading room, watch me trade. There's a chat room, an alert room, and then we do workshops during the month as well. All right, if you want to book that, then there's the link. Put that in the room now. All right, so what I showed you earlier on the slides on the alerts, now ordinarily I would open the trading room on the Fed day. The reason why I didn't do it this day is because it wasn't a full-blown Fed day, it was only Fed minutes. I'll just show you that slide again. So this is what I did in the alert room. Now most guys in the room know that between 7 and 9 o'clock in the evening, I do occasionally post something. I do post a trade, and so that's if you want to trade in that period, that's the time you need to have the app open and be ready for these moves. Okay, so even if you got an alert and you weren't able to act on it, you had the option of getting into the nasdaq short, which was exactly the same setup, but it triggered an hour or about 50 minutes later. The nasdaq tends to do that. That's one reason why I like trading the nasdaq, because if the Dow charges ahead, then what we do in the trading room is look at the nasdaq, and that happened to me on yesterday. The Dow had a really shallow pullback and ran. I didn't take the shallow pullback. I didn't want to chase the market, so I traded the nasdaq and got 70 or 80 pips out of the nasdaq later in the day. Right, let's come away and have a look at that. Great, thank you very much, John. And yeah, John is in the training room already, and anybody who comes in on the system gets the option of doing free retakes. I'm looking forward. I think it's a really good idea for you to do a retake, John, because particularly with what I think is coming up, so we can stay nice and sharp, ready for what I think is coming up in this market. So this Dow is bounced. It is a raging bull market at the moment. I just think I'm getting ready for that to. I think it's going to change. These markets are very hot. It's very as a US investor, it's getting harder and harder and harder to find good US trades. So there's various different things that are telling me this market is too hot, and so therefore I am getting ready to short. It's a lovely short, great follow through on Wednesday night into Thursday, lovely bounce, and but hey, plenty of opportunity for this to come back. If you look at what happened over here on this daily chart, we had 3 heavy days of selling here in May, a big bounce into this B wave, so A, B, C. We've got a lovely 3-wave move here into June, a lovely 3-wave move into this area here, but I'm now looking for this to pop back up here. This is potentially a very bearish setup. So intraday, if we continue to get signals, bullish signals, obviously I will take it. As a day trader, we've got a reasonable amount of volume, it's a decent push higher, happy to take money out of the market as this pops up. But if we get to this level here or into this level here and we sell, boy, am I going to be in that, and I'm going to sit nice and short and stay in that. Alright, and that oil chart is fascinating, absolutely fascinating. So lots and lots of opportunities. Let's have a look at the nasdaq while I'm here. Yes, the nasdaq is has been a big box play. Europe to me is a lot stronger than the US at the moment. I think Europe has got the potential. UK, I'm much heavily invested in UK stocks than US stocks at the moment for that very reason. So we had a box play. A box play is this. If you are, once you come into the box, if it's a bullish box, then you buy the lows, put in your support and resistance, buy the lows, buy the support, look for breakouts, look for pullbacks into the box. Look, we came out of this on Friday, sitting on top of that box. That's really bullish for the DAX. Very, very bullish. So the potential to go back to 16k is good, and maybe more. And there is scope for the US market to recover, so I will still be buying pullbacks short term, but getting ready for another move to the downside later on. Right, any questions? Like I said, if you want to invest in your trading, come on the program, learn the rules, trade the system, watch me trade, and pick up these alerts with these targets that I'm giving out, and get a return on your investment. Final call for questions. Don't want to take up too much of your time, and it's Saturday, so I'm going to get back to my weekend. All right. Nothing else to add to that, really. Monday is 4 p.m. in the afternoon. I do run them regularly, so you got two. If you can't do 4 p.m. on Monday, you've got two options. A, you could do it by video in your own time, or B, you could wait till I do them normally on a Saturday. They're normally Saturday morning, 9:30 in the morning. I will be running some Saturday programs shortly. In fact, if the demand's there, I will run one next Saturday. So you've got a couple of options. It's 2 hours. It's 2 hours on Monday and 2 hours the same time on Tuesday. But like I said, if you can't do one or both, I will give you access to the full video so you can run it in your own time. If you want to talk to me about or ask any more questions about that, I'm happy to talk to you independently, or you can email me. Alright, there's contact forms from the website and telephone numbers, etc, etc. Thanks very much for your time. I hope you enjoyed that, but yeah, just a quick recap on the actual system itself. Very quick recap, and then I'll go. Yeah, like I said, it's as simple as standing aside. Don't even attempt to get in on the first move. Where are we? Here we go. You simply wait for the direction, fib it, and trade the 61% pullback. So you end up with, this is just one of about 7 setups. There's the move, there's the pullback, and there's the direction. That's it. That's all there is to it. But these Fed setups only occur on average about 3 or 4 times a year. Sometimes more, sometimes less. But this specific setup only occurs 3 or 4 times a year. Benjamin, you've just come in on the tail end of it, but I will give you the video. I'll make sure you see the video. You need to see the video because it's an excellent presentation, if I say so myself. Well, it's a fantastic day on Wednesday, and you know, this is what I'm a day trader for days like this. And I tell you what, the key thing on this is that, as I said in one of the comments on the slides, the key thing on this is it's counterintuitive. The reason why a lot of people would not have been in on this trade is because this trade was completely counterintuitive. Because at the time in which this, yeah, you get the big drop, but then you get this really decent move up. And so I'm shorting in a period when that has got a lot of, okay, it's a 2-minute chart, but yeah, you got a decent push. That's a good 150 pips off the low, isn't it? Let me look at it. The low was 150, and that pushes into 290. So it's 140 pip push higher. So you are selling after 150 pip bounce. So who's gonna short that? Only the people who understand about, you know, a three-wave move, a three-way data move. The other occasions, I say this only occurs 3-4 times a year. If you are an oil trader, which I am, I love trading oil. I trade less and less now because it's not the same vehicle it used to be. But this does occur on a good week in oil. You'll get this once a week in oil. You'll get a move in the invents, either up or down. Oil tends to do 100% pullback these days. So if you get direction, pullback, move, fantastic, get in on the pullback. But in this case, it was only 61%. 61% is the most common pullback, the most common, particularly on a Dow setup. But the oil has a habit of doing 100% retracement. And of course, so if it's a lovely drop. I did one not so long ago, and it very counterintuitive. We got a huge move up in the oil. It was a big drop, huge move up. I stuck to the setup, I stuck to the rules, and sure enough, about a couple of hours later, I had at least 150 pips on the books by sticking to that setup. Okay, so something to so you can take away this freebie setup and try it in the oil. I do look at oil in the room. I do call oil trades in the trading room, and you are welcome to come in and share that with me if you want to come in on the room. All right. Right, final call for questions. Otherwise, I'll stop the video and leave it there, and make sure you all get a copy of it. Yeah, that's fine. Yeah, I'll tell you what. I'll even post my number in here. Why not? Make a note of my number. Put that in your phone book, and yeah, we'll talk Monday. That's fine. All right. Great. Copy that now because I'm just about to close up because no more questions coming in. Thanks again. Enjoy the second half of your weekend. I hope the weather improves. It's my wife's birthday tomorrow, so we're going on a safari tomorrow in a wildlife park. So I'm really looking forward to that, and I think the weather's going to be okay. So yeah, strange thing to do on a birthday. Yeah, maybe, but looking forward to it. It's going to be good fun. Brilliant. Right, thanks a lot for coming. I'm glad you joined me. There are other free events coming up. I'll be doing day trading events, free day trading events every Tuesday. So make sure you're on my mailing list. Again, if you come on the website under briefings and click here. In fact, I'll give you this page as well. Get yourself on my mailing list and I'll drop you a line on events. Brilliant, thanks a lot, bye for now and have fun.